Jason here. Today is March 11th, and this is your aftermarket update. So for those of you that are regular consumers of the information that we put out here on a daily basis, or most days of the oil trading group here at the Oil Trading Group, you are familiar with our OTG trade of the day. The OTG trade of the day consists of me describing some trade that we got into at some level, and then how we wrote it down to a target that we had projected, and we talk about it. And then there is a video that might be anywhere from 45 minutes to an hour and a half long, and you get to see that particular trade being worked in its entirety. And that has value, right? And that has value. Today, however, there was no such single trade. Even though we did finish up on the day 124 ticks, or right at $1,236 today on our Top Step Trader Combine, there was not a single trade that got us there. All right, so what I am going to do, there was a single theme throughout the day, but there was not one single trade. So what I'm going to do is I'm going to kind of show you that one single theme in the day. We'll talk about a little bit about how we managed it, why we got into some of it, how we could have done better, and we'll just go through a little bit of the anatomy of the day. But one thing I do want to point out is today was the crude oil inventory report day. And if you go back to yesterday's blog post, Combine blog, day 2 rollover, you'll see me talk about the fact that the American Petroleum Institute, which is the private industry report that comes out at 15:30 Central Time on the day prior to the inventory report, there was a big discrepancy in what was expected versus what was actually came out. There was a 4.2 million barrel build that was expected, and there was an actual drawdown of 400,000 barrels. So again, that had a little bit of impact on what happened in that trading when that report came out yesterday. As we were heading into the inventory report today, if you go back and read that blog, you'll see that there was some bullish news, but that we were still expecting a build in the inventory, which was going to ultimately be bearish. So we said that today had an opportunity to be a choppy type of day. Now you're going to look back at the chart, and you're going to see that we did have a couple of nice moves, but for the most part, the oil market cooled way off until right at the very end of the day. So let's talk a little bit about what we saw at the beginning today. And I'm going to start here with your market maker level chart. So if you pull this chart back here, I'm going to turn off the market structure and the revisions. And we're only going to look here. Actually, I'll leave this revision on so you can see when the pit open is. There's pit open. So as we got into the market today, one of the things that we look at, we have an opening range trade that we look at. And one of the things that it has that to meet the criteria for me is that both the 1 minute filter that we use and the 5 minute filter that we use need to line up. Today, they did happen to line up, but we did have a level up around, and you'll see it here as we get through. We had a level right here at 97, the daily structure signal. This is one of our market maker levels, and this was a dynamic support and resistance levels that forms based on price action into the overnight session. Okay. One of the other things that we had, though, going against us as well is we had a 70.5 retracement area. So if you take, and this is one of the retracement areas that we look at in here, if you take this swing high and measure it down to the swing low, we retraced back up here to 81. That is one of our support and resistance retracement areas that we look at. We got up here to 81. So as the market opened up, I wasn't interested in getting long because we had both this structure signal and this 48.81 that was in the way. And so we didn't really do anything here. We did have a level down here, daily structure signal down here at this 32. We also had another level around the 35 area, and we were looking and waiting to get long down here. So as the market opens up, it's a little bit hard to see here, but you can see how we came right down into the daily structure mid, and then we bounced back up. We were parked at 96, one tick ahead of this daily structure signal. I was parked one tick short here at the 48.96 level, and you'll see that the market comes all the way up to 48.92 and doesn't quite finish me off there. So again, we had the sweet spot here. We could have gotten short at this 48.81. Turns out, by the way, that would have been the short of the day. But as the market then comes down, we do get long off of this. I think I was at 35 or 36 right here. It does come down to your daily structure signal. It pushes up here all the way up to 44. We do go up just a little bit higher to 45, and I end up coming back to break even on this particular move. Now, one of the other areas that I'm going to show you here, we did get a little bit of a bounce off of this area here. You had a 70.5 right here at this 44 area. They did get up to a double top up here at 53. This is what I call giving you permission to get out, by the way, on this particular entry. So this retracement came down to the sweet spot. That's this red line. It went up 9 ticks, double top, didn't give you the 10th tick. That would have been your clue to get out. Right, that's one of the things that we look at. That would have been your clue to get out. Getting up to 9 ticks, not finishing at 10 ticks, and then beginning to roll over is your clue to get out. So we did come through here, push down. We did hit the revision signal. Again, remembering that the short of the day, turns out, was this level up here at your 70.5 sweet spot up here at the 81. Okay, so the market goes back around, and then, of course, we are adhering to the Top Step Trader Combine rules where you can't be in a live position. You can't be in a position, rather. And while if you are an energy trader, an oil trader, you can't be in a position during the crude oil inventory report. So as we are fast approaching that, we just sat on our hands and waited for the report to come out. Now, I had a level down here around this 73, 74, and we have your daily structure extension down here, and I'm going to turn the market structure levels on, and we had this area down here at 66. So as the market begins to come down, we come all the way down right here to the market structure target, and then we reject. Now, one of the other things that I want to show you here is we talked about this early in the session today. This is your 60-minute chart, and we measured this off early as the market was beginning to open. We measured this entry off here early in the session. We said that we had a 70.5 long at 47.49. This is your 60-minute chart. We said that this would be a reaction spot on the day for us here. And so, again, we did come down to this 47.49. You can see that we spent about 3 hours rotating around that level, and that will become more evident here when you look at your 5-minute chart. That will become more evident. And I'm going to put a line on here so you can see where I'm talking about. Let's see, there's your 49 level right there, okay? So that blue line represents 49. Let's go ahead and make it a little bit darker, a little bit heavier here. Okay, so that level represents your 49, 70.5 on your bigger picture time frame. And looking at bigger picture time frame levels is very important, right? Looking at those bigger picture time frame levels is very important because they do provide you with an idea. Even if you're trading a smaller time frame chart, they do provide you at least with some idea of where the market may find support or resistance. In this case, it's support, as it is a 70.5 on a bigger picture time frame. So again, as you continue to roll through, you see that we do come down through it here, and we did close just one time and open. Closed one time below it, opened below it one time, and then the market began its push here. Now, what is also interesting to note, and I'm going to turn some of these off, is that this day was full of these retracement levels. Choppy markets on CL give you the opportunity to find a number of 70.5s. So on this push down, measuring from this swing here, gives you to the tick 4801 a 70.5. You continue to push down, okay? And I want to show you a measurement here. You grab this swing point and take it back to that swing point there. This came down to 52, I think, actually this came down to 57, and the sweet spot was 53, but wait for it. It'll hit the 53, and there it is, right? There is that retracement point to the 53. Now it comes down a little bit, but goes back and forth. And again, you can see what I'm talking about. So again, while we don't have a specific OTG trade of the day, and you can see here that we then begin this rotation around this 49, only closed one time below 49, and again, on your 60-minute chart, your higher time frame picture, you do have that 70.5 right here at the 47.49 level, and that's measured from swing low to swing high up here, right? That's measured from swing to swing, gives you that level at 49. Actually, we could probably bring this up just one tick, and that would get you there at 50, but you bring this down one tick here. to the bottom of this, and that takes you right to 40. That takes you right to your 49 level. So again, that is your 70.5. And what I want you to do is watch this. So again, you take this high swing on the day, not the very high, but the after pit open swing high, and you measure it to the after pit open swing low and the low on the day, and look where we hit twice, 70.5 right there at 48.45. So again, in a market like this where the range is fairly narrow, it is a fairly narrow range today, but fairly narrow, 49.05 to 47.50. Let's see here. 49.05 minus 47.50 is 155 ticks low to high. The average daily range over the past 20 days has been 224 ticks. So even though we did have a fairly big move down off of this 70.5, we were captured by the bigger picture time frame 70.5. And that's represented here by this big line, this big blue line. And we rejected all the way up to this 70.5 to end the day. This is also something else that you want to watch for on crude. If you do get and have trouble getting through a certain level, and I know that there was some, after I left, I was reading through the text and the chat window from some of the room members, and they were talking about needing to close crude below 56 and ultimately the 49 level. They were talking about that in the room. If you have that kind of trouble getting a close and some move down through that level, then expect it to push back for a 70.5 on a given day. And that is how the day generally ends. And you can see here this dark line represents the close. And we closed out around 44, and there it is at 45. So, again, while there isn't one specific 70.5, or sorry, let me say that again. While there isn't one specific OTG trade of the day, we were able to play some of these retracement points and put together enough what we call base hits, right? Single score runs. We ended up $1,236 on the combine today, so it ended up being a very nice day. Just simply following your levels around and making and understanding where oil, in this case, is likely to retrace to. So, again, as always, I want to say thank you for spending time listening to and partaking in the information that we provide for you here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trading.